I am the VP of Strategic Partnerships and Sales for AngelSoft. I'm based out of New York. I'm a fast-talking New Yorker, so I'm going to do my best to slow myself down so the translator can do his job. But if I get too fast, just give me a wave. I'm going to talk to you a little bit about the trends of angel investing in the United States, and also I can talk to really across the world, because as we talk about AngelSoft, you'll see that we're a worldwide platform. And I'm going to complement some of the things that my countrymen spoke about, and probably contradict some other ones of it. But that's go with it. So who are we? Who's AngelSoft? So I'll talk a little bit about who I am and where we come from and what we do, so you have a little bit of context of why I'm here. So we're the global leader for software to the early stage ecosystem. We had a vision a number of years ago, about 7 years ago, that the best thing to do for globally to get the ecosystem of angel investing moving was to build a single platform that entrepreneurs and angel investors could live on and basically share deals and work on deals together. And there's a lot of people that have tried to do this, and what they did is they said, oh, well, just like eBay, you've got this marketplace, and what we can do is we've got people on both sides, so why don't we just put them all in one place, and then things will magically happen. Well, the problem is that entrepreneurs want to get funded about 100 times more than angels want to fund. So you have this very lopsided market, and what happens is whenever you try to do these matching services, a lot of times the matching services have failed, because what happens is that you get lots and lots and lots of entrepreneurs rushing to this place, and the investors casually go there, and then they start to get barraged with business plans, and then ultimately decide, you know what, this isn't worth my time, and they stop going there. And then ultimately you see these companies trying to sell services and things like that to entrepreneurs. So we took a different approach at AngelSoft, and we said, look, what we're going to do is we're going to build really robust, really great tools for the investors, for managing their deal flow, for filtering out deal flow, for maintaining and managing their platform. And because we would build these great platforms, then ultimately, the entrepreneurs will come, but essentially we'd create a place that angels would want to be. And so right now, we started out just doing exclusively angel groups, but now we actually we have angel networks, angel groups, individual angels, business plan competitions are on our platform. We have incubators. There's definitely entrepreneurs on our platform, and lots of other early stage VCs and things like that. So just to give you a little stats of what we have, we see about 3,500 companies that come through our system globally every month. And that's applying to individual investors. We don't actually do investing ourselves. We're just a software platform. Right now we have 35,000 angel investors across the globe. 80,000 entrepreneurs have essentially come through the system. And we're basically the back end for over 650 networks in 65 countries. We're an official software platform for a number of country federations of angels, including the ACA, which is in the United States. There's NACO, which is Canada, Australia, New Zealand, Ireland. We're the platform for the World Business Angels and also France Angels. And actually announcing today that we're going to be signing FNABA as a partner as well, which is actually very exciting for us. We have in QA, we have our Portuguese translation completed. So we're going to be launching that live in about 4 weeks. But trying to be a platform that any Portuguese angel group can use to not only collaborate within the country, but also collaborate with the world of business angels for everyone that's on the platform. Literally, when entrepreneurs apply, you can just click a button and share with individual angels and other angel groups within the country and across the globe. And as part of that, basically what we've done is, as part of the agreement with FNABA, we'll basically, if you're an angel group that's a member of FNABA, you'll get the software 100% free. So talking about some of the trends that we see in angel investing. Angel investing is definitely growing. What we've got, information that we've gotten really from our angel investors is that these are people that the a lot of the new people that are coming into angel investing, they're former LPs of venture capital funds. So what we're seeing is that or at least the information we're getting back is that, you know, during the dot-com bubble, we had a lot of these VCs. The LPs all ran there. They put all their money into these venture capital funds. The venture capital funds did great. They raised other funds, and now they've got these funds, and the funds didn't do so great. So now these limited partners are saying, you know what, I can do this just as good as they can, and I don't have to give away 2% of the fund every year and 20% of the upside. So why don't I just do a lot of this myself? And so we see a lot of these going there, and as a result, we actually see a lot of the fund sizes, you know, people that had raised, venture capitalists that had raised massive, massive funds, when they're raising new funds, they're raising much smaller funds, which we think we're seeing a lot of those people now coming to AngelSoft and other places and saying, hey, I'm going to do angel investing. Added alongside that, the younger, wealthy people that are coming out, they're basically choosing a lot of angel investing for a number of reasons. In addition to not giving up the 2%, 20%, but with social tools, with all the information like Twitter and Facebook and you know, Google alerts and everything that they can get, a lot of these younger investors are used to just all this information that they can get on the companies and feel that they can make the most educated decisions and make the best decisions for their money. Whether or not all of that's true or not, we'll see. Whether or not they need professional managers of their money, we'll definitely be seeing. But these are some of the trends, or at least that we're hearing and seeing from our angel investors, not only in the United States but across the globe. That they want more control over where their money's being put and how it's being invested. And of course, our vision is to create software to make all of this happen. So the other big trend that we're seeing is multi-sourcing. So what used to happen in angel investing was essentially you'd have entrepreneurs. The entrepreneurs would go to a particular angel network or angel group, and they would apply, and they would state their plan, and then there would be a deal lead. One of the angels would basically take the deal, and they would work with the deal. They would run the deal, and they would essentially get co-investors. They'd get the fund going, and then we'd see that, you know, they would go to get the round filled. The money would go into the company, and they would go. Well, what's happening now is we're not seeing the deals being done by a single group nearly at all. There's a lot of collaboration going on, which we like to think is partially because now there's software that makes it easy. But we also think that that's a result of, you know, there's a lot of people that are tapped out. There hasn't been a ton of exits, so a lot of people that have put aside a certain portion of their wealth for angel investing are now at the point where, you know, they're looking for an exit before they put more money into it. So we see a lot of that happening. So groups are having trouble filling rounds and things like that. So we see a lot of multi-group angel investing happening, and a lot of times there's a lot of individual angels, people that don't want to be affiliated with groups, joining in on a lot of these rounds. And probably the most important thing is we see entrepreneurs really leading and coordinating the round. So rather than sitting there and waiting for the angel investors to make it happen, we're actually seeing that a lot of entrepreneurs are now taking the ball and they're running with it, and they're going, and not only with tools like ours, but you'll see there's a whole thing in Silicon Valley around AngelList, which is not really a competitor, it's sort of a tool that allows you to help find angel investors. And that's really the entrepreneurs taking the ball themselves and running with it and trying to get their round funded. Affinity angel groups is something else that's a big thing that we see coming up in the United States. So it used to be that the angel groups were all based around a particular location. And a lot of that was because, oh, well, if I can't drive to the company, I'm not going to invest in it. So therefore, we're going to get a group of local angels, and we're all going to invest in companies, and it's companies that we can go check up on at any point because we can drive there. Well, there's been a trend towards saying, hey, you know what, I can invest in a company anywhere in the world, as long as there's somebody locally that I trust, who can go and do that. So what we see is we actually see affinity angel groups starting to develop. And sometimes that's based off of the university you went to. Sometimes it's a particular industry like green tech, or we actually have a group in the United States called the Space Angels that invests in companies anywhere in the world as long as they're creating technologies for space exploration. We also see a number of former coworkers that are banding together to create angel groups. So ex-Google Ventures, that's XGV, is a number of exited Google employees that have gotten together, and they're doing sort of a fun sort of angel investing and investing in seed startups. So these are some interesting trends that we're seeing. And really, it's all because it's really just about finding the best deals the best way that you can, and investing alongside people that are like-minded, people that you can trust, and people that you feel comfortable working with. One of the definite things we're seeing is power to the entrepreneur. This is a big, big trend that we're seeing. I touched on this before, but there's more and more power going to the entrepreneurs in funding for the company. Part of that is because the demand for good deals has gotten very, very, very high. And goes to say that the best deals typically have the best entrepreneurs. So we see a lot of the entrepreneurs using more and more tools to express their business to rise above. So if you saw, kind of the way the paper resume now is replaced, you've got to have something a little more interesting. There's visual things, there's web pages. They need to look at your social graph and all of that. We see that same kind of same type of thing evolving in angel investing, where the entrepreneurs don't want to have that blank one page or that blank, paper business plan. They want to have their live Twitter stream. They want to have their live Facebook page. They want to have all the things that are going on with the company there for anyone that's thinking of investing in it to see that and see it live. And so we see that trend, and so we see a lot of that happening. And AngelSoft is actually working on tools to help the entrepreneur express that type of stuff in a better way, and to have the angels and the early stage VCs be able to see that. One of the most significant trends that we're seeing right now as it comes to angels is we see more rounds happening and smaller rounds happening. And I actually had a bunch of statistics that I was going to give you here, so actual numbers, but we have a number of privacy things that we've signed with our groups, and so I didn't get approval on showing a lot of the numbers, but I can probably share those with you once I get all the approvals, if anybody wants to let me know if you want to see those. But we actually are seeing that a lot smaller rounds are happening and a lot more frequent rounds. So the point is that the entrepreneurs are coming in, and rather than getting that $1 million round or $500,000 round from the angels, what they're getting is they're getting $150,000 or $200,000, and it gets real quick. The angels don't do a ton of due diligence. They basically look at it. There's less red tape. A lot of it's a convertible note. That they basically say, go, give us some milestones, we expect some results, and then if you come back and this is what you got, we'll give you another $200,000, another $250,000. And it's good for the entrepreneur because they get their money fast, they get to move fast with their business, they get right back into, you don't spend a ton of time in funding your company, you get to spend time building your company. And it's also good for the angel because by putting less money in, and you'll see the dead, the companies that shouldn't exist will basically disappear, and the companies that should rise to the top should rise to the top, and ultimately you can get that money that needs to be put into there. My countrymen had already spoke on this, but we see a big rise in accelerator programs, and they're really great, and we encourage a lot of entrepreneurs that ask us about them to do it. We say, look, you can spend 2 months going around to VCs and 2 months going around and trying to get angel groups going, or you can spend 2 to 4 months in some of these accelerator programs and really get some amazing contacts, amazing entrepreneurship advice from people that have done it before. So really, as we touched on, these companies get a tiny amount of cash. They call it macaroni and cheese money. It's just enough to live on. It's typically, somewhere in the neighborhood of $6,000 to $8,000 per founder, up to 3 or 4 founders, and then they'll get somewhere into 6 to 8% equity of the company, and then not necessarily need a prototype. It really it's more about backing the jockey rather than the horse. Do you believe that this is an entrepreneur that can be a heat-seeking missile, that this is somebody that can take an idea and run with it, and knowing that there's going to be shifts along the way as they figure out their business model and their market fit. So all throughout the 2 to 4 months that they're there, they get mentors and they get a collaborative workspace, and they all work together. And then ultimately, at the end of it, they have something called Demo Day, which is at the end of it, it's basically graduation. And they go and they say, hey, they meet with VCs, they meet with angels. And then, some of them will get funded and some of them will just run with their business as is, because a lot of them, believe it or not, are actually generating revenue by the end of the program. Another big trend that we're seeing is there's a big focus on revenue now as opposed to adoption. It used to be you could be like Twitter, you could be like some of these companies where you just essentially, as long as you got users, it was okay and you were going to be successful because you'll figure out later, you'll have advisors, as long as you have the eyeballs, you're there. Well, there's definitely a shift towards revenue generating businesses. They're expected, angels, at least on our platform, are definitely expecting that these companies have a revenue plan or start generating revenue and have revenue as part of their milestones. I think that the economic downturn has really said, hey, look, we want you to come back. We don't want you to come back to us having generated no revenue and having no plan for revenue, and we just have to put more money in you. You need to come back with some real revenue targets. We talked on this again, super angels, these micro VCs. Depending on which side of it you're on, it's a good thing or a bad thing in terms of a trend. So as we said, we've got the Dave McClures of the world, we've got the Ron Conways of the world who have done tons of deals personally, and now have basically gotten to this celebrity status where all the best deals are coming to them. And they've now said, hey, I get all the best deals, so why don't you come and invest alongside me with these micro VCs? And, depending on, again, where you're at, this is a good thing or a bad thing. Where it's great is you got a lot of companies that are being funded, and you've got a lot of real quick decisions being made. The downside is that it's potentially stealing good deal flow away from other local groups or from other affinity groups, which we see a lot of those complaints coming in from some of the angels. And of course, there's the flip side is if a Dave McClure will throw money at anything that sort of smells like a business, if he turns you down, what does that mean about your business? So we see a lot of those things happening with our groups, and so it's a good thing and it's a bad thing, and I think there's going to be a lot to watch in this space. Primarily, I don't think there's some micro angels, some super angels stuff, but it's primarily a Silicon Valley type of phenomenon right now, and most of the press and things around this are in Silicon Valley. But I think we're going to start to see some of these guys appear in other places. So that's essentially my presentation for trends in angel investing.